gold, for example, on the 26th of December, it hit its all-time record high close. This is basis the most active February futures contract, 45.47. And the fact that it came down to a low of about 43.13, that, traders, is not by any definition a correction. It's a slight pullback. We can call it a number of things, but one thing that would be inappropriate, in my opinion, is to call this little tiny dip in gold a correction. Simply put, a correction is typically a sell-off of 23% or greater. It can be as deep as 61.8% in a bull market, recover, and market technicians look at that as a deep but respectable correction. They don't look at it as a pivot bullish to bearish. We have seen no technical evidence that that is occurring. Until we do, both precious metals, gold and silver, are running on all 8 out of 8 cylinders, although most are 12 and I drive an electric, but nonetheless, it's driving at full steam.
Market analyst Gary Wagner emphasizes that gold's recent dip is not a correction, but merely a routine pullback within a powerful bull trend. After recording an all-time high, closed near 45.47 on December 26 in the active February futures contract, gold briefly retreated to around 43.13, far short of the 23% decline typically required to qualify as a technical correction. Wagner notes that true bull market corrections can reach 38% to 61.8% without signaling a trend reversal. With no bearish technical evidence present, both gold and silver remain in full momentum mode, signaling continued strength rather than exhaustion. Now, we present the clips from Gary Wagner's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
There has been really no correction. The move itself from the former high on the 26th of December, $76, it comes down to $70.
Yeah.
While $6 in silver is a reasonable and sizable move, it certainly, again, doesn't qualify as a correction, because when we look at the totality of the move from 30 to 80, $6 back is not any kind of a viable percentage in what we look for in terms of a real correction. Simply put, we have not seen either gold or silver have a realistic correction pretty much all of last year, and this year's too early to tell. But again, when we are pairing these precious metals against fiat currencies, in this case against the US dollar, the recent moves I know that came in gold took gold to all-time record highs across the board in almost every currency, not just the euro, not just the dollar, but pretty much all of the currencies. And that is a strength statement, meaning regardless of what currency you pair it against, you're pairing paper against an asset that has for thousands of years had real intrinsic value. People more and more are not looking at currencies as having intrinsic value. And that, to me, is the key. Base the March contract below 70. That's these dips. I'll blow this up just a little bit. That's these lows that came in at the end of the year. Then it popped up and made its all-time record high. Tuesday, January the 6th. Yes, it's come down for the last 2 days, but as long as silver stays above, call it $71 if I want to kind of tune in, we are not looking at any change in terms of whether or not silver is in a bullish or bearish trend. What we can say is we've lacked any kind of healthy correction. And so I always believe the caveat has got to be buyers beware, because at any moment we could see a real correction take place if major players begin to liquidate long positions. I am still accumulating. I am still advising in terms of our trade. 95% of them initiate a long position rather than going short. Short, to me, in the futures markets, in these metals at this particular time, is asking my clients to stand on a train track with a train barreling down the track at 80 miles an hour and kind of saying that it will stop.
Mm-hmm.
Well, it may and it may not. The point is the strength right now in gold and silver is really maxed out. There's huge momentum, very few, if any, real corrections. And so people are buying the dip. When we see the market sell off a couple of dollars, that is an advertisement. Oh, we missed this. We can continue to accumulate gold and silver because they're both acting very similar in a similar manner, trading near the recent all-time records, selling off slightly, traders entering the market, buying that dip and moving it back up. Again, in a normal scenario, even in a normal bullish scenario, it's not unusual for there to be a correction of 23, 38, even 50%, and still look at it as bullish. In other words, we don't believe that when we see these minute sell-offs, that a real pivot has taken place in which market sentiment has moved from bullish to bearish. And we've got so many fundamental factors going on in the world right now. Recent action by the United States against Venezuela. That one kind of, at least to me, came out of the blue. I'm not privy to inside information, but that is the kind of behavior that puts countries on edge because they don't know what a next move might be and who that might be against.
Despite recent pullbacks, precious metals gold and silver have not experienced true technical corrections, says analysts, because typical corrections require declines of 23 or more, far greater than the modest drop seen from recent all-time highs. Both metals have repeatedly hit new records across global currencies, underscoring broad strength and safe haven demand amid ongoing macro uncertainty and geopolitical risk. Traders continue to buy dips, reinforcing the bullish trend. While healthy corrections can occur and offer entry points, the current retreat is seen as minor compared with historical correction thresholds. Long-term fundamentals remain supportive, though caution is advised given persistent volatility. Let's get back to the interview.
I think a big drop is going to be implemented by a major fundamental shift, economic policy by the Fed, not cutting rates when the expectations were high. I don't think it's going to be a statement by a political entity that moves this market, bullish or bearish to a great extent. It is action by superpowers that no one was expecting, whether it's Russia, China, or the US. That will have a dramatic effect. But I think that we're not seeing the international and economic boat being rocked to any great extent. And that's a good thing. But we do know that the metals tend to run in times of uncertainty. We do have uncertainty in terms of action, but I don't see it being a political statement having that effect. 45.50 is a very achievable level. We're at 44.60. And in terms of the numbers that I'm looking at throughout the year, I would not be surprised if we saw 47 and 48 by the second quarter of this year, if not sooner. I'm trying to stay away. I'm good at calling prices, not very good at calling time parameters to get there, because the pace at which we have seen these metals move, especially with the lack of any realistic correction, has just kept this bullish momentum going. And there's that FOMO from regular speculators that watch the market really go supersonic and not take advantage of it, which is why I tell my clients, you might want to slow your level of physical accumulation if you're a buyer, but you don't want to stop, because even though it could come down, we're sitting above 4,500. I believe we could see $5,000 by the end of the year or sooner. And that's not that much of a stretch. In fact, if gold and silver perform 50% of the gains they did last year, that is actually a walk in the park. That would be achievable and not turn anybody's eyes going, wow, we did not expect this.
Precious metals remain firmly bullish as analysts point to policy-driven shocks, not political statements, as the real catalysts for major market moves. A significant drop, if it comes, would likely result from an unexpected Federal Reserve policy shift, such as failing to cut rates when markets anticipate easing. For now, global conditions remain relatively stable, supporting continued upside momentum. Silver near 44.60 could realistically reach 45 to 50, while gold holding above 4,500 keeps 5,000 firmly in sight by year-end or sooner. With minimal corrections and persistent FOMO-driven buying, gold and silver continue to thrive amid economic uncertainty and strong investor demand. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.